The UFC has just signed a $7.7 billion deal with Paramount. However, beneath the surface, there are a lot of rumblings with fighters. John Jones has publicly demanded his release, him being lowballed by the UFC, given his exclusion from the UFC White House card, which will take place later this year. There's been a lot of rumblings with UFC fighters, particularly towards the decision to award Conor Benn $15 million to fight Regis Prograis on the undercard of Tyson Fury against Arslanbek Makhmudov. Is this the time for a competitor to come into play? And by competitor, I'm talking about John Martin and the PFL. Now, John Martin heads up the PFL. He's the CEO. I want to go through some of the points that he was making on the Ariel Helwani Show about the future of the PFL and whether it could compete with the UFC. Now, before we go into John Martin and his role in the PFL, I think it's important to just quickly run through the ownership structure of the PFL. So, it's got two main strategic backers. It's got 885 Capital and Nighthead Capital Management. Now, 885 Capital are a UAE-based investment fund founded by Sudeep Ramnani and Jai Matani. Interestingly, their sort of business model is that they deploy their own capital instead of using third-party investor money. They are one of the largest shareholders with 2 board seats. Their portfolio is quite interesting because they have sort of invested in the PFL, they've invested in Baller League, European League of Football, Blue Crow Sports Group, and the newly formed venture that is set to shake up rugby, Rugby R360. So they're pretty much next gen sports evangelists, and they're looking to sort of break the traditional model of sport. Now, the second sort of company is in stark contrast to the first. Nighthead Capital Management are a New York based SEC registered investment advisory founded in 2008, and their founder Tom Varner used to work for Goldman Sachs. Interestingly, their sports portfolio consists of heavy investment into Birmingham. They own nearly 97% of Birmingham City, with Tom Brady, who is on board as a minority partner. They've also acquired a 49% stake in Birmingham Phoenix at an valuation of £82 million. So two very different investment firms investing in the PFL. Firstly, throughout the interview, John Martin was quite clear about the fact that he wanted to really grow the PFL sort of brand and presence in the US. He cited that PFL Europe and PFL MENA were quite strong. PFL Madrid event, which was the first sort of MMA event in Madrid, and attracted the likes of Jude Bellingham and a whole host of Real Madrid players to the event. And he sort of viewed it as a big success, and he really wanted to push on and use that momentum to sort of build a presence in the US. Mentioned that he wants a further 9 shows to take place in the States. As is key with a lot of organizations that are wanting to sort of become successful in the sports industry, they need to have a strong distribution partner. And now PFL's, I guess, agreement with ESPN is coming to an end at the end of 2026. They are yet to find a permanent home after that agreement. In the interview, Martin has said that he is undergoing work with quite a few sort of broadcasters. We might even see an extension with ESPN. These talks are very much in the early stages, and he did mention the likes of Netflix. Netflix are, of course, making a big splash in the world of combat sports. They are hosting a show under the MVP umbrella, which will see Francis Ngannou and Ronda Rousey on the same card. In order to sort of achieve the success in the US, he really needs to get that sorted as a main priority. You've sort of mentioned as well that he could look into signing a non-exclusive agreement, which could see the PFL on multiple platforms. We could see a one-off event on Netflix, provided that they want to show an interest in sort of putting on combat sports and MMA in particular. But also then we could see them signing a deal with ESPN or another major US broadcaster to sort of get it on multiple streams and to really push the American market. While he remained quite respectful to the previous CEO Don Davis, there were a couple of notable shifts that have taken place since John Martin has resumed responsibility as CEO. The first one is Francis Ngannou. Now, Ngannou has been relieved of his contract with the PFL. The sort of reason why Ngannou came to the PFL was because the ownership structure at the time was sort of really trying to push this aggressive pay-per-view model, and they identified a talent like Ngannou to really push them towards expanding the PFL brand. They also cited the rapid investment, and they believe that um, you know if Ngannou was under the PFL roster, the Saudis would want to host events with Ngannou as the main star, which means that the PFL would gain high site fees. They would earn a lot of money from putting on those shows, which would inevitably pay for Ngannou and inevitably boost that brand. However, that plan didn't quite work out. Ngannou's sort of debut deceived to flatter. It didn't really go anywhere, and it didn't really lead to many pay-per-view buys, which was sort of formed the reason why Ngannou subsequently left the PFL. However, Martin did also say that Ngannou remains involved with PFL Africa, so it remains to be seen if there's a strategic alignment there between Ngannou and PFL Africa in the future, considering he is now making his Netflix debut under MVP's umbrella in the coming weeks. John Martin also spoke a lot about wanting to build a combat sport ecosystem, and while he was light on detail, I didn't really go into it. He did say that they were looking at sort of tangential businesses, investments in technology, which will enable them to engage with fans. And now, if you look through PFL's sort of investment in tech, they've almost always been at the forefront of integrating technology with live sports. So they have something called the Smart Cage, which is a proprietary piece of tech that is integrated into sort of real time data and live betting odds into broadcast, so that fans can really engage with the fighters in the cage and can really see what's going on from a tactical perspective. They've signed a distribution deal with Sport Radar, which will enable them to facilitate live in-fight betting. They've got involved with Web3 and the metaverse. Got involved with Socios and were the first sort of sports league to launch an NFT fan token. So they've really been at the forefront of technology and sort of integrating that into sports. And I guess this is something that we can see a lot more of as they in John Martin's words look to build a sports ecosystem. Now the PFL are quite strong when it comes to securing distribution deals. They currently have 20 premium media distribution partners across 150 countries, and as alluded to earlier, signed a quite a big deal with Movistar Plus, which is the largest paid TV broadcaster in Spain, which also houses La Liga and the Champions League. They signed a deal with them, which will see Movistar cover 24 PFL global and international league events in 2026. They've signed deals in France with RMC Sport, TV Nova in Czech Republic, Stan Sport in Australia, ESPN in the US. Of course, that deal is sort of up for renewal. In Latin America, they've got Fox. They've got Supersport in Africa, and in Asia, they've just signed an extension to their existing distribution deal with Unex, which again is part of their wider push to sort of elevate the brand in Asia. So from this, we can see that they've got a really strong Europe and sort of MENA audience, which is given by their distribution partners. I guess when that ESPN deal comes to an end, they're going to really need to sort of hone in on where the PFL will be shown, and who will have the privilege of showing that. But it's in stark contrast to the UFC, who have just signed that deal with Paramount. I guess the money involved in securing that deal with Paramount is $7.7 billion over 7 years. Means this isn't something that they have to worry about, because they're earning a lot of money from just that single Paramount deal. But who knows in the future? The UFC, of course, led by Dana White, Zuffa Boxing have just signed a deal with Sky Sports here in the UK. So maybe we can see the UFC sort of up their game, so to speak, and maybe sign another deal with Sky Sports, which will see the UFC be housed there as well. Another thing that was discussed is that the PFL needs to do a better job in allowing fighters to express sort of themselves through getting rid of the uniform deal. Now, the UFC and Reebok have an exclusive apparel sort of deal, which means that, all throughout fight week and on fight night, fighters can only wear sort of the apparel that was given to them by their sponsor. Now, the PFL are slightly a bit more relaxed, but still have a apparel deal. They signed a multi-year deal with Takedown in November of 2023. Takedown are a global sports apparel brand, and they were the official apparel partner across PFL Global. They sort of design and deliver the official PFL kits worn in the smart cage. They have a takedown of the night bonus, which sees the fighter who does the best takedown gets financially rewarded. And as mentioned, they are a little bit more lax. They allow fighters to feature two personal sponsorship logos on their shorts and walkout apparel, and crucially, there is no sponsorship tax. So, compare that with the UFC, you can't have any sponsors on there, which sort of strips fighters away of another medium of them making money. With the PFL, at least they're allowing sponsors to come on board. But I guess in the future, and as John Martin sort of relied upon, if they do want to build sort of their stars into becoming global superstars, they do need to get rid of this distribution deal. We've seen countless times across countless different across boxing in particular. You've got sort of boxers that are synonymous with brands. You've got Prince Nassim Mohammed with Adidas. You've got Anthony Joshua with Under Armour. Canelo is sort of starting to make a name for himself with Dolce and Gabbana and Hennessy, the drinks brand. So, they do need to get rid of that if they are going to grow. Is John Martin sort of suitable for leading the PFL into quite a crucial period in terms of growth and development? Well, just a little bit on him. He was actually the chairman and CEO of Turner LLC from 2014 to 2018. He led the company to $13 billion in annual revenue and $5 billion in operating income. He was a CFO of Time Warner before that, so before 2014. It's quite interesting because when he was at Time Warner in 2008, he tried to get Time Warner to partner with or acquire the UFC for HBO, and then he tried to do that again in 2016. So he's seen sort of the rapid rise of the UFC, and he's been a big proponent of it, hence why he's tried to get his companies to buy them. It hasn't almost happened, and then now this opportunity for him to lead the PFL, a close competitor of the UFC, has come up. And so in terms of that, I guess he's quite suitable. He's also he's earned 2 black belts in karate, a blue belt in Brazilian Jiu-Jitsu, and he's competed in amateur competitions into his early 40s. He was a big advocate for the UFC expanding their cable distribution, and he recognized the potential of MMA long before a lot of people did already. So I guess, yeah, he is well suited to lead it forward. But just because you're a fan of something doesn't ultimately mean you'll be successful. So I guess only time will tell. But in terms of competent people, he seems one of them.